Good morning, good morning. How's it going, guys? Nice to have you. Lots of news everywhere, about strikes. You can't really escape it, can you? Everywhere you look. Bloomberg's got the headlines, CNBC, stock futures fall as Israel conducts limited strike against Iran. What does CNN have? More headlines. But Taylor Swift is sure up there, isn't she? Taylor Swift is sure up there in the headlines. You can't avoid her, can you? No matter how much you try, there's no avoiding Taylor Swift. Yeah, so we're going to look at the markets today. We're going to do a little wrap-up of what took place this week. Make sure we're on the same page so we can be prepared for next week. Like I always say, it's always about following the storyline of price. And if you can follow the storyline of price and follow what's taking place, then you can have a better understanding of what is likely going to take place. And then you can avoid, mistakes, as a lot of traders did overnight, trading euro. Not a good idea to trade euro. Yeah, I posted yesterday that there's a good chance that we could start seeing a rally. But I'm not going long. Okay? I wasn't going long. There's a reason why I wasn't going long. You have to know when the odds are in your favor and when they're not. And definitely opening up a position on euro wasn't a good idea. I'm waiting for a move to the upside. That's, something that I'm watching for. But, I'm expecting a move to the upside. But does that mean I want to go long? No. It doesn't mean I want to go long. What is the main thing taking place here with the euro? What's the main thing going on here? Remember? We talked about it before. Let me bring it up. Let me show you. Where are you? There you are. And here we go. So what's the main driving factor here when you look at the data? We talked about it before. The positions. What have the banks been doing? Offloading long positions, right? Okay. Are they aggressive with shorts yet? No, they're not aggressive with shorts. Coloration of the cells. They're becoming less bullish. So why would you go long? Because you want to time the exact moment that things are going to reverse up? Bad idea. That goes against the odds, your odds. If you wanted to go long, you'd have to know precisely what you're doing. And the vast majority of people are not there at that level of trading. Okay? It's extremely risky. When you start off in trading, or whether you're an amateur or you're a professional support and resistance trader, my opinion is, unless you know exactly what you're doing, you don't put on the trade. If you have a hunch, if it looks like, you don't trade. Period. Okay? Sit on your money and don't lose it. You wait until the odds are stacked in your favor greatly. And when the banks are in the process of removing long positions, as they are right now, you don't want to be going in long. The banks are offloading longs, so you don't want to be taking on their longs. So this is a situation where the banks are preparing to drop price. Have they dropped price? No. Are they getting into a big short position right now? No. So you have to be patient. A lot of people lose money because of just lack of patience. All the money that you're losing between now and when the trade is actually going to be a good time, you could be using it as your risk for when the trade is about to play out. So a little bit of whiplash back and forth here, but the bottom line is, what did I say we were watching for? What were we watching for? Retail traders to reduce their long positions. Okay, so that's it. That's all. I'm just sitting on the sidelines waiting, watching for the storyline to play out as I suspect it will, because I'm following the storyline. I'm looking at what the big banks are doing, and I'm just following the storyline. So we went from them holding 90% long to now 70% long. So are they offloading their long positions? Yes, they are. It's exactly what we suspected. Will they likely continue to offload their long positions? Yes. But here's the deal. Do you know the exact path price is going to take? I know with high degree of certainty that price is going to eventually head higher. But do we know the exact path price is going to take to get up there? No. It's difficult because they're not accumulating. Banks are not accumulating along right now with the anticipation of pushing price higher, or with the expectation of pushing price higher. If they were collectively building a sustainable structure to the upside, we would be able to see very clearly which path price is going to take to get up there. But when that is not the focus, the path is usually very haphazard, as you're seeing right now. So it's not a good time to be trading. And you have to know this. And again, these are the things that we teach at the school, okay? To understand structure, to understand context, to understand what is high odds, what's not high odds. What does it look like when they're building structures? When you know what it looks like, then you know what it doesn't look like. And when it doesn't look like that, you know you stay away. It's as simple as that. You could take the money that you're losing on these unnecessary trades and pay for 1 month membership at the school. And what you'd learn in that 1 month would open your eyes beyond belief. But hey, you know, what do I know? Anyways, so they're offloading their positions, which is good. This is what we wanted to see. Beautiful. All right. I was also looking at the S&P. Big push. So we were talking about the monthly chart. We were talking about the size of this candle here. And as you can see, it's a lot larger than the dimensions of this candle here. So they're no longer creating a basing at these highs here, which is fine. So they're pulling back, and if you look at the weekly chart, you can see that it's reacting from some demand. I believe I pointed this out yesterday. Price came into the demand, and now it's rallying. This is institutional buying that we located here, and it is now in play. So you can look at the headlines, and you can see what they say about why the stock market's dropping. Stock futures fall as Israel conducts limited strike against Iran. You see, the problem with believing that headline is that you think the market dropped because of what happened in the world. And you're like, well, I wouldn't have known that that was going to happen exactly when it happened. So therefore, I wouldn't have known the market was going to drop. Okay? Do you remember the post I made on Telegram, also on Twitter, about the bearish signals that we were getting on the S&P? When was that? April 4th. April 4th, I think. I posted that. Okay. April 4th, I posted, we're getting bearish signals, guys. It's April 19th right now. And these headlines, stock futures fall as Israel conducts. I didn't know there was going to be, this airstrike today. I had no clue. So how would I know that the market was about to drop on April 4th if the market only drops because of world events? You see, here's the problem with most traders. And again, it's not their fault because this is what we get taught in school. We get taught not to think logically, not to be critical, and understand and look at the markets and try to figure out why it's doing what it's doing. And don't accept the explanations given by authorities, authoritative figures. You don't trust them because, I'm living proof of it. I continue to share what I share because I want you guys to see the reality of the markets, okay? We had bearish signals days ago, and the market dropped. What a surprise. But now the news is saying, oh, the market's dropping because of this, No, it has nothing to do with that, my friends. The market will do what it will do, and world events will only help perpetuate it or facilitate it. So now we have demand in place. So what do you think we're going to have now? What kind of pressure? Take a guess. Bullish pressure? Yeah, probably. And then, so when I see this, I like to look at the headlines and think to myself, what are they going to say now for the rate, for the rise in price? What's going to be the excuse? First, the excuse was the attack caused a drop. What's the excuse for it rallying now? I already saw some headlines that were saying, oh, but Iran said it didn't cause any damage, so now the markets are rallying. Silliness, complete silliness. Has nothing to do with it at all. Nothing. Zero. The situation is price declined. This is profit taking at the highs. We've seen across many stocks similar situations. Let's take a look at Apple. Insiders are selling. I mentioned good website, openinsider.com. You just come here and type in the ticker, and you take a look. Look, go back to 2022. What do you see? Do you see any purchases of stock of Apple throughout this whole thing? Look at this column. Do you see buy? Do you see a buy here at all? So imagine, you're friends with some, imagine you're friends with some executives from Apple, and you are asking them, what's going on with some of your staff at Apple? Anybody buying stock? What should I do with the Apple stock? Should I buy? What do you think? And the guy's like, listen, let me just tell you something, okay? In the cafeteria, I've been talking to some of the CEOs, CFOs, directors, the CEO. Everybody's selling stock. Everybody's selling stock. So what would that tell you? That the stock's going to do well? This website's perfect. This gives you a nice inside look. Look, we've been talking about Apple and how it doesn't look great. The chart doesn't look great. Okay? This was the last area that would have held price up. Why? Because there was buying here. There's buying in this area that caused price to go here. Price dropped, contacted the buying area, was not able to do what we wanted to, what we wanted to see up here. Okay. Drop back down. Now look at this bearish candle. Heading right back down to this area of buying. Folks, if this buying area gets taken out, down she goes. But what am I seeing? All this is selling from insiders. Insiders within the company. Okay. So it doesn't look good. Doesn't look good. So I'm seeing a lot of we've looked across the markets with students, and we're seeing a lot of signs on a lot of the stocks that they need pullbacks. Berkshire Hathaway, I love the company. I love the stock because it's made me money in the past. And it's very strong. We got in long down here. Let me show you. And exited out here. Why did I exit? Because from what we were seeing on the charts, we saw potential for profit taking by big institutions. What does it look like when it's profit taking? This exact situation. So you see how we exited here right before this whole zigzag situation? Okay. It's the power of what we do and how we do the analysis and how we can locate areas on the charts where it's likely going to be areas where profit taking is going to be had. So there's a lot of this profit taking that we're seeing on the charts. Look at the chart here. Basing, rally, rally. Oh, what did we have? That's right, 2 momentum candles. Basing, what do we have? Reversal candle. This goes a little bit lower. We'll have a bearish engulf. Okay? We could get a bigger drop. Just like the market. Same thing with the market. S&P show. So, across the board, we're looking at stocks and they're showing very similar things. Look at Costco. Okay. This rally up was incredibly strong. Not what we typically see, but fueled by a lot of news. So, same thing. We're starting to see signs of a breakdown. But again, on the higher time frames, we had basing, institutional buying massively, and now we're at the highs. So let it sit, let it rest, and then we'll see what happens. It's likely we'll see a decline in price. Likely. But I don't know for 100%. I don't have a crystal ball to tell you the future. But that's what's likely going to happen. So I just sit on the sidelines and wait patiently until I know what's going to happen. I think there's no reason to suspect this market isn't going higher. Okay? There's no reason to suspect that this market isn't going higher. I believe it's going to go higher. NASDAQ retracing into buying areas. The Dow Jones has a little bit further to drop until buying areas are contacted. The Russell 2000 dropped from supply, as you can see on the weekly chart here. Hasn't yet contacted a buying zone. And the S&P has not yet contacted a buying zone, but they're pretty much there. S&P, NASDAQ, they're pretty much there. So we could actually start seeing a massive rally begin to form. And did you see what I posted? This article. Somebody, some expert, was saying that we could see a drop of 30% in the markets. Just nonsense. Just pure nonsense. Like, there's no evidence to back it up at all. Nothing. I sit here day in and day out, and what I'm sharing with you is a different approach to the markets, a different way of thinking. a different way of validating a thought. I don't just say, oh, the market's going to drop, but then it's going to go up for no reason because I just think so. I give you the reasons why. I give you the logic, the thinking that's going behind why I believe that's going to happen. I don't just tell you it's going to happen. I tell you why it's going to happen in detail. And it sounds logical because it is logical when you understand the reality of the market and you understand what's really taking place. That's why I always share the storyline so that you guys see it from a different perspective. And then you get to see it play out as expected because we are actually tapping into the reality of the market. You know, when I see somebody coming out and saying, oh, the market's going to drop 30%, it's like, who would even listen to that? Who would even listen to that? It's so nonsensical to even pay attention to something like that. But traders do. I don't understand. You know, well, I do understand because, again, in school, we're taught what to think, not how to think. We're taught, here's how it is, don't question it, right? And then you have experts coming out saying, market's going to drop 30%. And nobody says, how do you figure that? What in your right mind makes you come to the conclusion it's going to drop 30%? What? There's no proof of it whatsoever. What builds this market? What drives it up? Institutional buying. Okay. All right. So do you think it'd be important to locate the institutional buying on the charts? Yeah. Okay. So do you think that if institutional buying was just a little bit below current price, before you could even open up your mouth and say the market's going to drop, don't you think the institutional buying area would need to be removed first before you can even say the market's going to drop? Wouldn't that be logical? Yeah. Okay. So then how can somebody say that the market's going to drop 30%? Anyways, it's ridiculous. Okay. All right. So that's it, guys. So, that's the situation with the S&P. That's the situation with the euro. I won't get into much more detail. I'm going to be doing a much more detailed session in about 35 minutes with level 3 students. And so all new students that join the school will have access to level 1, level 2, level 3. Level 1, you learn all the supply and demand, trend lines. Level 2, everything to do with structure of price, what are magic zones, key zones, all that stuff. Level 3, the most advanced level, is the market dynamics, how it plays out, how it responds from all the different supply and demand zones and all that good stuff. So we're going to do that session in about 35 minutes. Okay. So thank you for today. I appreciate it. Thanks for joining. And that's it. Don't do any crazy trading. If you want to spend your money somewhere, come and spend it at the school. Okay. At least you'll get something out of it. Don't waste it on trades that you don't fully understand. Okay. So that's it. Enjoy the rest of your day, and we will talk to you later. Okay. Take care, everybody.